Good morning and welcome to the Macro Show for Friday, March 6th. I'm Ryan Ritchie of the Macro team, joined live in the studio by Hedgeye CEO Keith McCullough. As a reminder, if you have any questions, you can send them on in. And with that, Keith, we'll turn it right over to you. Last day of free week.
Yes, free week. And since it was so popular yesterday, we're going to make sure that if you come back and pay for it, like I'm going to make some calls, right? I see the future, like people on TV. No. What we need to do is execute on the process, okay? We're going to level you up from a coaching perspective. We're going to get your, the biggest risk, which is in between your 2 ears, your emotional reactions to things, making feel-based decisions. We're going to change that. We're gonna use the machine. I think most people like AI, don't they?
I think they really do. They love AI.
Yeah. Well, you work on it all the time.
I know. So, I love AI.
Yeah. The other thing I know another great coach, by the way, who was just honored for his process, and I think all of his people would agree. Coach Mark Boulding. That's why I'm wearing a Yale hoodie here. Congrats to the Boulder. They call him the Boulder, right? And he's from, so he won Coach of the Year for the ECAC because Yale won the ECAC this year. They're in the top 10 going into the tournament. And best of luck to him and the girls. Phenomenal run. I know some people will say, well, they tied with Princeton, but you can tell my friends at Princeton that I looked up the stats because I do a little crystal balling on this type of stuff, but do look backwards first. And it looks like Yale beat Princeton head-to-head a couple times this year. So that's what that looked like head-to-head. But again, he's done a phenomenal job with the program. He's a great guy. Red Deer, Alberta. That's the factor exposure you need if you really want to change something in hockey. Okay, you got to get that Canadian blood in there somehow. And if you think about the opportunity for Yale hockey, they're about to change their coach on the men's side. Okay. And I'm going to make a call here.
Okay.
It's a conditional call.
Okay.
If they choose a certain coach, who I know is a phenomenal candidate, Yale hockey on the men's side, for the first time in a long time, is going to be back.
Right? All right.
It's going to be back, baby. And that's going to be a great thing for everybody in the alumni. Again, congrats to the Boulder and who could be his coaching partner on the men's side next. All right, let's get going here. Top three things this morning in the notebook. Number one is going to be oil. They know about that in Red Deer, Alberta. Oil? Oh yeah, you watch Landman? Yeah, you know what happens. So again, this is a big deal here. So they have they have this thing in the risk range, these Hedgeye guys, called fractal dimensions. So again, unlike like a Gaussian curve or a Bollinger Bro band, I get that sometimes. People are like, oh, I use Bollinger bands. I'm like, oh. Okay, so now you use a moving average and you wrap standard deviations around it, which are also Gaussian assumptions. Great. And then they get upset. And I'm like, why are you so upset? Like, you're using a wooden hockey stick, right? Don't get upset. Get better, right? I get it. You're not getting what's on my laptop, but I can definitely tell you right now that I'm using like a much better stick. It's not made of wood, okay? Even a bad shooter can shoot it relatively hard with these new sticks. So again, get yourself in the spot where you embrace the uncertainty associated with the signal. Understand when the volatility upside, like what just happened in oil, is essentially what happened to gold in the first week of January, Rooster. So you'll recall that gold volatility went roof. Well, now alongside the volatility of gold, now we have the volatility of oil going into the 80s. See how it says 83, 83 there? So now we have upside volatility still is volatility. So again, what you should expect from that, and I wouldn't change anything, right? Okay, I took oil to my minimum yesterday, but it's still at my minimum, which means I'm still going to make money on it. And again, it's not a minimum that's inconsequential. So again, you take things to your minimum because you choose not to die that day that it goes down 16% or 10 or whatever in a day. That's what 80, 90, 100 vol does. Okay, so again, just get yourself ready. It was a great day for those three positions. I showed it last night. Again, I think this morning it certainly was in the first sentence of the early look. Like, I had a bad day yesterday, but I had some good things happening even though I had a bad day. So for me, a bad day is when I lose money, okay? Now, it's not a bad day like emotionally or for my family or anything like that. It's just, okay, we lost today. I don't like losing. I hate losing more than I like winning. So, that's what happened yesterday. We had a big counter trend move in a lot of things that had been trending and been phenomenal. Like, if you haven't been long cyclicals for as long as we have, or you haven't been long gold for that matter, which also corrected, or you haven't been long gold miners, or you haven't been long anything that were long, and it got tagged yesterday, well, then you wouldn't have made money on a trending basis anyway. But yesterday was a bad day. Now the question is, what are we going to do with that as we come out of today? And I think a lot of it can be answered quite simply with rate sensitivity. So on point number 2 this morning, what is the street painting? What was the jobs number?
Yeah, so the jobs number was negative 92,000 versus 126 the previous month. Estimate was
negative 92, right?
Yeah, the estimate was 59,000, but the move was basically futures went to down. Well, we don't care about the futures, but just so you can see the reaction, it was down 1.4%, but crude oil went up to 8.2% in the morning. So there's.
What are we going to do with that data? Bond yields down. You think? Yeah, they went down on that. A little bit.
They're
Because
flat right now.
when you evaluate why bond yields should go up, you have to evaluate both the growth and the inflation. Okay, so when you think about interest rates, 3 numbers, write them down. 422 on the 10-year yield, that's trend. Top end of the risk range, 421, which is inside of trend. And a dovish, essentially, labor report, which should knock bond yields off what they were higher this morning. You don't need a crystal ball. You need a process, right? So the big pivot yesterday was actually not buying more industrials because they broke immediate term trade support. I'm not going to review that 6 ways to Sunday. Read the early look, educate yourself so that you have deep breaths embedded in what you're doing and you're prepared for what I'm going to say. Again, I rotated. Instead, I was buying utilities and I was buying rate-sensitive sectors, so buying utilities and buying REITs. So if you look at the setup on the bongo board, that's just it on the sector side. I mean, 8 out of 11 sectors were down on the day, and 2 of the 3 that were up, I'm short. So that's called a bad day on equities. Now, the good thing is I'm not an idiot. I just don't I don't put my family's hard-earned capital only in U.S. equities. I'm long oil, I'm long wheat, I'm long oil and gas stocks. So so these are the things that we're doing. So the way to diversify some of that momentum that we have in cyclicals, industrials in particular, XLI, is to just not buy those and incrementally allocate capital to the 2 sectors I said. That's the sector update. That was new, okay? And you do that, rate-sensitive moves. Also was buying the crap out of TLT, very technical term. Didn't work intraday, but should work on the open. I'm not doing it for intraday or on the open. I'm doing it for the next move down in bond yields back to the low end of the risk range, which is still all the way down at the cycle lows of 395 on the 10-year. And this jobs number, again, the Federal Reserve has to talk about the jobs market when they talk about what he really wants to do, which is cut interest rates. That's essentially what he promised, Warsh, don't forget. And that's another catalyst for bond yields in as much as anything else. All right, those are your top 3 things. If you haven't read Holiday's books, they're awesome. They're like, to me, they're like therapy. It's almost like it's not the Bible. The Bible to me is the Bible. But his books are all the same structure, easy to read, but they're therapeutic in the sense that if you have stoicism at your core, like all the things we talk about, let them do what they're going to do. Let them panic. Let them freak out. Let them do what they're going to do. Just be yourself and be the best version of you. Don't hang on to the past. You know that rope that you're holding on to? You either let it hang you or you let it go. Okay? So this guy's really good. Like this chapter in particular, and some people hate him for it, and I love that. The Bible taught me that, right? The more obvious the hate, the more true the words can be spoken. Now here's a chapter, part 3 is called The Sirens, which is excellent. Oh, by the way, one of our subscribers sent this to me, which is Ted Oakley sent me more good books than anybody, I think, in Hedgeye in the Hedgeye community. I love new books. A lot of people send me books that I've already read, so then I'll give them to the team if they haven't read it. Because when you cite a book every 10 days that you're reading, you read a lot of books over the course of 19 years, which is what I've been doing. But again, some great quotes in here. I mean, you got to love this one. Human history is a catalog of human stupidity. How many times a day do you do stupid shit? How many times in a day do you see other people do stupid shit? How many times in a day do you think that they think you're doing stupid shit, but what they're doing is actually totally normal, and vice versa? Right? Nobody's crazy. Everybody's just doing what they're doing. Right? May or may not be stupid. But what human history is loaded with, in markets in particular, is people doing stupid things with their money and with leverage. Okay? Now, we're not part of that cattle class. And we may not make the most money in the world on a big year, but we're definitely not going to lose it when everybody else does. So hopefully you glean that from this week. Have a level of wisdom embedded in what you're doing. If your only answer is, well, that's not what Warren Buffett did. Warren Buffett, who I wrote my senior thesis on at Yale and evaluated what he might have done in the 1970s in terms of his returns if he had a short selling strategy. I'm pretty well versed in Warren Buffett. Didn't win me a Nobel Prize. What did Warren Buffett have that everybody else watching this today didn't have? What's the number one factor he had on compounding his returns? Other than good returns.
No drawdown? No.
Time.
Time.
Drawdowns don't matter if you have 75 years to do it. So if you go back and you look at Warren Buffett, I mean, at one point when he went, I think it was in like 2018 when I first was looking at this, the numbers are going to be roughly right, but just believe me, directionally. He was worth like $85 billion. But 84 of those $85 billion he'd made in the prior, since he was 50. Okay? So you could take somebody like Renaissance Capital, if you look at like his returns are higher, but Jim Simons didn't start making his money till he was 50. Buffett started investing when he was like 10. Time. All right? If you take my strategy and your Warren Buffett, so for my answer to everybody who's like, well, that's not what Warren Buffett does, let's just start with two things. You're not Warren Buffett, and neither is the person running your money. So it doesn't matter. What matters is what's in your account and your journey from here and not having the drawdowns. Rooster, what is the implied return, even if you're not doing what we're doing, which let's just use some monkey example like the S&P 500. Okay. What if you avoided one of the quad 4 crashes that Hedgeye has called, including the 2008 one, which was the biggest one? It's not like, oh, well, if you take that out. Take it out. Like, did I take it out of my accounts? I mean, anybody older than me, did you just get the money back like the Goldman guys did? No, you can't take it out. What if you just eliminate one of those years?
Yeah, so basically if you took the S&P 500 and you just eliminated the 2008 crash, which we eliminated, you would have doubled your money at retirement.
Doubled it, right? So you're still a buy and hold guy other than in quad 4, right? Do you think Mark Bolden gets these guys and these girls into the top 10 by just doing things the same way as the guy down the street at Dartmouth? No. Do it differently. Now, what if you actually avoided all of the quad 4 crashes that Hedgeye's called?
That's when you start to like 4x your returns. It's like 3.8, but it's a lot more.
Yeah, if Jim Simons was doing it from the age that Buffett was doing it, he would be worth way more than Buffett because his annualized return was recently north of 60%, whereas Buffett's like 22 or something like that. So, yeah, focus on you, okay? Get rid of all the bullshit that you've been taught, fed to, and the easy things to say because they're easy to say, and start to spend some time understanding, okay? Understand that from this point forward, what you've done in your investing career or on your path or on your journey, whatever you want to say, is what you do next, okay? So let's go. We're good. Thanks for joining us this week if it was free. Doing a little bit more speeches this week. Typically don't go off like that, but I shouldn't say typically. I go off sometimes.
It just depends on the day.
Yeah, it just depends.
It just
depends what kind of mood I'm in.
We have no teleprompter here.
Well, I'm thinking about exactly. We don't really have. I mean, we do have the contours of what's going on here. So what do we have here? We reviewed this all week, every single day this week. That's a lower high versus the all-time closing high. For the S&P 500, which is 69.78. Now, it's not materially inside, but again, when you're looking for a breakdown, you're looking for a lower high in the range and immediate-term trade breakdown. The S&P had both. So even though the PPT, the plunge protection team, came in for the last couple times that we've had big down days this week and protected the market or marked it up into the close, that didn't change the math, okay? Besant's not able to change gravity. Now, I think it's dangerous, by the way, Scott, or whoever's doing this. I think it's very dangerous. If your new submission is no longer free market capitalism and letting markets clear, which everyone in government since I've started doing this has believed in, Hank the Market Tank Paulson and Ben Bernanke, they didn't believe in economic gravity or free markets. They believed in themselves. Okay? So I believe, and my God has told me, including the fractal gods, which are, a little down the pecking order. But again, my God would say that, again, humans weren't meant to bend in smooth economic gravity. No. Gravity will eventually get you. You know how Brad Pitt, you see that in that movie? People are like, what? Guy's like, what happened to that guy? What got? It's the gravity that got him. Scott, watch the movie. We're friends. It's okay to say. If you want to suggest that nobody's been in there, I'm not saying you were. I would never say such a thing. I'm not saying that. I'm just saying that if you think that this fractal pattern is no longer going to exist because intraday the S&P futures bounced off the lows, you don't know what the hell's going on out there. Scott Bessent does. He knows it very well. In fact, I think that he knows it as well as anybody in Hedgeye Nation. I mean, the guy's very competent, macro-aware investor. Okay, what else we got going on for you here this morning? We are in the chop bucket, guys. You show the gauge. We're moving in towards the fuck bucket. Do you notice the Russell volatility is right knocking on the door? It's like 28. Woo! I'm the one who knocks, by the way. What do you think I'm going to do if the Russell goes into the fuck bucket? With the Russell, I have it at my minimum. I wrote a note about it last week. I didn't chase it this week. It was down hard yesterday. It was down 1.8%. It's down like 5% from its all-time high. It's at my minimum. I made a pile of money in it. Does any of that matter? To me, yeah, because I already booked those gains. Does the minimum position that I currently have matter? Yeah, to me that matters. Do I have to go back and say, whoa, coulda, shoulda, woulda? No. I got to make a decision on that. If the Russell 2000 goes into the fuck bucket, it will be sold outright. We have a quad 4 coming, quarterly quad 4 in this coming quarter, don't forget. We have a monthly quad 3, and we have a quarterly quad 4. Now, yeah, but you said it was narrow. I said it was narrow. I'm still telling you right now that this is manifesting, and it's narrow. Every single time I do this, it's a different dance. It's within the same ecosystem, but it's a different dance. There are different parameters. This one has an oil shock in it, okay? The last one didn't, or it wouldn't have been quad 3, it would be a quad 4. Yeah? And when oil stops going up, that's going to be quad 4 in rate of change terms anyway, because again, the oil price is going down, okay? So think, but don't get distracted. I have some, Alvarez, nice question today. Well, what if it's a hybrid? Blah, 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 blah. I could almost hear it that way, and if he didn't say it that way at home, I'm not gonna apologize. I'm using you as an example because it's convenient. Because a lot of people, that's how they think. What are you going to do? See how I did that? That's what you should do. Shut your mouth, open your ears, take some deep breaths. All right? I'm the one who knocks. I've never missed a quad 4, and I don't intend to. Watch the moves I'm making. They've all been quad 4 moves. Buying treasuries, utilities, and REITs, what are those? Quad 4. I don't have to say, this is quad 4. Run for the exits. The S&P 500 is down 2.1% from its all-time high. Full-blown quad 4s, like the one we called in 2022, the most recent one, the S&P was down over 20%. Okay? These are the real things you should be getting concerned about at some point. Now, again, you're not going to be concerned about quad 4 when oil and bond yields are going up. That's quad 3. So again and again and again, you take a deep breath. You say, I'm thinking the guy who taught me about all this stuff is pretty aware of what's going on. Maybe I should do what he's doing. All right? Now, to some people, that's worth $5,000 a year. Other people are like, I can't afford that. What are you running, a $6,000 account? I mean, it's okay. I got no problem with that. You know, go back to 1999. I had negative money. I came out of this place with nothing but student loans. I could have gone on a full ride to a shittier school. I would have had a high SAT score at those schools. Walked around, I'm mucker, you know. No. I know what it's like to be some of you. Of course. I'm not talking down to that. Don't give me that bullshit. You know, like these people, like they all try to label you because they can't handle that you've done something that they couldn't do on their own. And that our community really values it. So thank you very much for that and for taking in another rant. What else do we got going on for you out there? We got the Tier 1 Alpha data. We have the MOVE index. You know, the MOVE really started to move because it was predicting what our nowcast was saying. So our inflation nowcast, don't forget, looks like that. So do Treasury bond vol against the Hedgeye inflation nowcast. Do you think that these two things don't have a discussion all day, every day that doesn't include a human being? Fuck yeah. Yeah, It's one of the primary inputs to the bond market. So now it's going up. Actually, if you go to the next month, we have it going up 22 basis points. That is the February number. We have it in March with this oil spike. It's going to go up potentially even more than that. So again, the down move in inflation is finally looking backwards. The down move in bond yields evidently agrees with that. Look at the 2-year yield chart that I was doodling on this morning, Genron. All right. Now you can take a lower high, longer term on this. This is only like a 6-month chart. Now if I pulled that way back, it's, do the way back option on Google, you're going to find a chart that's big time downward sloping. Okay, so you're up at a spot at a lower high where bond yields should back off, and the jobs number supports that. Right? There you go. Now we're doing it. Now see that? Now do that in the 2-year yield. Now what front runs the Fed? Mucker's 2-year yield signal and his inflation nowcast. Oh, the signal in the quad, huh? I could play for Mark Boulding. I'm very coachable, right? So again, I would be mainly a back checker in his scenario because I don't have very good hands. So, you're one of the most coachable guys I've ever had. So you're nodding.
Yeah, I don't have good hands too. Even in soccer, I had bad feet.
Tier 1 alpha data, we got, so has anything changed in this picture? So again, PPT team, you're going to have to change gamma back to positive. You got to give me a higher high in the risk range. You got to give me a bullish trade breakout. You got a lot of work to do here, guys, and you're gassing a lot of money here. So watch it, and by the way, that's American taxpayer money. So here we are, no matter where I just let the thing flush if it wants to flush. Because obviously in a negative gamma situation, the flushes happen faster, which is exactly what you're seeing in the pre-open. Again, down moves go down faster, so do the bounces. And after they bounce, they're like, oh, the bottom in software is finally in. Now I can go back to banking or whatever the fuck it was you were doing before. None of these people that are calling the bottom in software got you out of software. None of them. Your child was like deathly ill, the doctor misdiagnosed it, and then you go back to the same doctor for a diagnosis. Like, what are you, stupid? I mean, human history is littered with it. We've already talked about this. So again, who cares what they think? Short software today. Yesterday and today were the days to short it. Not at 20% lower at the low end of the range. That's what an idiot would do, okay? Like my former self, okay? That's why I built it. I'm like, I'm done with this. This is stupid. I look stupid going to the morning meeting because I would have my P&L. I have to show it at the hedge fund. They're like, what is this guy, an idiot? And by the way, if you have a lot of Dumbo days at a hedge fund, you're not going to last. They don't keep you there because you went to Yale. No. They don't care where you went to school. Okay, so let's keep going here. What else we got going on for you this morning? The rest of Tier 1 Alpha data. We do have a little pop here. So if you're thinking about, like, today's a pretty obvious day in terms of oil price. You get some dude from Qatar. Some of you still pronounce it Qatar. Qatar. The oil minister, energy minister from Qatar thinks that the oil price could be up near 150 banging off my head dollars. What? Who is this guy? 150? I mean, come on. So this is the day where you're probably all that, like the concerns, the tourism, everybody knows that everybody knows. Like if a bomb hits a U.S. boat, I don't think that you have a new investment horizon that everybody just came up with or something that's unique to that. By the way, I did bump my head with that. That kind of hurt a little bit. I think I'm going to call my mom.
The future hurts.
Yeah, that does hurt. Feel how heavy this thing is.
I know how heavy this thing is.
I just whacked myself in the temple with that. I kind of like that. I need a little contact.
It wakes you up in the morning.
Yeah, a little. Yeah. Well, in the morning, I don't know what you're doing in the morning, but I mean, as an older man, here, people can see me on Twitter. I'm not doing there's not a lot of contact other than with my hands on the keyboard. So again, keep going here. What else we got? Impact table. 2 stocks that were dogs yesterday are still bearish trend. Apple and JP Morgan that I'd highlight there. And then on the left side, when the rally's being led by bearish trends, Avago, Microsoft. Actually, Berkshire's mentioning, that's not Buffett anymore, by the way. That would constitute a shift. Amazon, they're all bearish trends. Sell them all today. You just got to bounce in them, and that's when you sell. You don't sell them at the lows of the risk ranges. What else we got going on for you this morning? Nice move in Japan and China. Nobody's going to talk about that this morning, but Japan, I know people were nervous about the Japanese ETF yesterday because I had one client say, well, they're going to open Japan down because the U.S. is on the lows. Well, then the PPT marked the U.S. up, and then Japan opened and closed on the highs. I mean, so enough of that narrative. It doesn't matter. As a former self, when people would talk to me about Japan, I'd be, wow, that's really interesting, because I would never look at Japan. Now I measure and map every component of Japan. So we're long of Japan. If you bought more on down days, then well done. China is next on my list. Rooster's given me a nice list of ETFs that are actually working from the China front that I didn't know about. So again, I asked the guy, he gives me the stuff, and then I'll be the one who knocks if I add China, which I'm looking to add to the asset allocation model. Keep that capital moving out there. We got you out of India before it went down 6%. It was down 1.5% last night. We're still short Indonesia, which was down 1.6% last night in kind. Could I short some other things in Europe? Yeah. You got bearish trend signals in France, Spain, Germany. Germany, we publish the signal every day, so you already know that. You shouldn't have to have me tell you that, but if you are lazy and would prefer me to give you shortcuts, I can do that for you too. Okay? United Arab Emirates down another 2.9%. So again, we got out of that. You're going to sell it today down 2.9%, or are you going to sell it when I sell it? Okay? That's the deal there. We flipped into Norway, as you know. Across the board on commodities, already highlighted that we're broadening the position. Silver volatility actually broke immediate-term trade support for the vol, which is bullish for silver. So expect me to keep buying the damn dips in silver with volatility materially lower, even though it's a lot higher than most things. It's materially lower than what would concern me, which would be an immediate-term trade breakout of the volatility of silver above 84. Now, you're looking at the price around 83, 84, and you're thinking, I'm thinking of the price. No, the volatility of the price is not the price. Okay? You're good. What else we got going on for you this morning? Corn breaking out. Soybeans breaking out. Platinum, still bullish trend. We're along that one, too. PPLT. Bond yields already set our piece. Currencies, no change. Dollar remains bullish trade and trend. And Bitcoin failed at the top end of the range, as it tends to do, and is now dancing around immediate-term trade. If it breaks trade, it's going to go down, should go down as fast as it went up above trade. That's the math. That's the whole point. I'm front-running behavior, okay? So again, 3 weeks or less is front-running behavior of the machine. So when I said it goes above 71,000, you should expect it to go a lot higher faster. It did. I don't know where it stopped going up, but it was 73 or 74,000. Then it breaks down through 71. What did it do? Hot knife through butter, 69,000. Oh, you crystally baby, you. What do you got?
I'll go with my first question here, which we have a lot of new people watching. Hopefully to become subscribers, but I think gets to the heart of how we really think about the ticker universe, right? And so I wanted to ask, how do you think about tickers as inventory, and how does that relate to when something breaks trade, and where you allocate that capital if you do? So
yeah, guys, can you show in the early look? There are some blocks here that I could save my time on. Again, it's free today, so print out the early look and just, think of them as chunks. So when you do like real coding work, or you do like the kind of work we do, there's what is chunking?
You're basically grouping in a big calculation.
Yes, chunking. So if you could, guys, can you show the early look component, the chunk that shows what the three things would be that I was looking at today? Can you scroll through that? Keep going. It's keep going. Right here, stop. Okay, lower highs in the risk range. Okay? Read that. If you read anything from me, if you want the answer to that question, this is a chunk. This is a big pattern inside of a bunch of patterns that I'm looking for. Number one, does it make lower highs in the risk range? That's a warning, okay? That's the first sign that the fractal geometry embedded in the math is changing. Two, did it break immediate term trade? That means that the selling, if it broke down, it goes down faster. If it broke out, like Bitcoin above 71,000, it breaks out faster, okay? So you would be looking, conversely, at higher lows in the risk range, which Bitcoin had with that setup as well. Bearish intermediate term trend signal, by the time it hits that, that's it. The pattern's confirmed, and it's likely signaling a quad shift. Okay? So again, and again, and again, I will not make a decision that doesn't include that as the rule. That's it. As a former self, I wouldn't even know what half those words meant and how to apply them mathematically to a model. It works. And most importantly, it works a lot more than it doesn't work. And when it doesn't work, I'm not that wrong. And when it works, I'm really, really right. Like, it got me to buy the breakout in oil. Like, I didn't know shit about this war that was coming. Didn't have to. What did it have? Higher low in the risk range, right? Immediate term trade breakout. That was like at $62. Hello. Now it's Big time trend breakout. It's 62 was trend actually, 62, 63. You trade and trend breakout. So that's what we're looking for every day. Mm-hmm. And I've been doing it for a long time, so I think I can give you a narrative on any of that. But you shouldn't care about that. Even though that we discussed this yesterday, I don't know if you watched it, but with Fletch, Angus Fletcher, it's like he is chief of storytelling essentially at Ohio State, and he's like, well, that's what people want, that's what they need, that's what they crave, and there's a structure to storytelling that makes sense for people. So you'll get that, but the when matters a lot more than the why, and he explained that too. I thought it was excellent.
Yeah, it was a great real conversation. The replay's up, and everybody can watch that one for free as well.
Yeah. You want to see some crazy shit that's going on?
Yeah, I always want to see some crazy stuff.
Okay, so you know how like we were telling you that the shit miner used to be the thing that people were chasing?
The BMNR?
The BMNR.
Great short.
So the BMNR. There's the BMNU. Like, you want to think about how, like, for those of you that we won't ever see again, let me just make sure that I say this. If you followed Telecom Tom Lee into BMNR at the top, you're a fucking idiot, okay? So again, we'll see you later. But the rest of us understand this. It's called a pump and dump. This thing, people were buying the 2 times BMNR. What was that thing down yesterday? We just got to give it, let's just give it a full send here. And before you turn this off, I want you to know that yesterday, this piece of shit was down another 0.7% on over 123 million shares.
It was down 7%, not 0.7.
Oh, down 7%.
Yes.
7%.
Yes.
On that many shares. So that means that there are a lot of people that get really angry at me because we're the ones who knocked and told you to get out of Ethereum, Bitcoin, and things like that. Okay? That ruins you. You take stuff like this. When I say that the retail investor, not a compliment, okay? The home gamers, everyone who's, hey man, I'm a keyboard cowboy. Since the pandemic, you know what to buy. You just chase, right? That community of retail high sediment basket, that thing is minus 25% since October. The closer you are to levering these things up into 2 to 3 times ETFs, which most of these people were, the more they're down. That's the real carnage in the market, okay? On the other side of that, you know what the number one, I will give you 2 seconds. If you want to run my money, I'll give you 2 seconds to answer this question. What was the most active stock traded in all of the U.S. yesterday? 1, 2, do you have it?
No.
You're not running my money.
No. Video.
But again, that's just how I do it. I need to know where the volatility of the market is. I need to know these things. They're all part of my reports. That's me. I'm just holding myself to my standard. If you want yours to be lower, that's fine. But I need to know every single day on the most active boards, where are the options trading and where are the stocks trading. Let me give you a little bit more time to guess by looking it up, okay? Now, what you're going to find is that people, again, the people are also good at chasing the other things that aren't going down. The number one stock yesterday that you could have bought, or the most actively traded stock, was a stock called TPET. Okay? Trio Energy or something. TPET. This sucker was up 87% on 399 million shares. And it has 10 million in market cap. I get it. If you don't think it's funny, then you don't play at a high level. But it's fine. 399 million shares on a 10 million market cap. Okay? So if you don't think that this whole ecosystem can be captured and taken advantage of and front ran and loved and hated and everything in between, you don't love the game the way I do. Yeah, this is unprecedented. And I do think, just one more thing. For those of you that never come back, I might see you again, because that might just be what you say. It's like hockey season. You make some cuts. Unfortunately, I had to make some cuts this year. I got some notes from some angry parents. I'm never coming back. Yeah, you will. if I pick your kid again. In 2027, when we hit a real quad four, like a disinflationary to deflationary quad four potentially, unwinding the CapEx dollars in tech that have been spent, that kind of a GDP unwind, all of that, all those types, gone. It's just a death march between October of now and October of then. I mean, I should say October of 2025 and October of then. These are material moments in history where a significant amount of people are doing a significantly overrated thing that doesn't continue. Okay, it's called chasing momentum. So we'll see how it goes. Hopefully we can, I should say hopefully, I mean, God willing, we will risk manage it properly. And I appreciate all of your attention. If you were only here for this week, it's our opportunity to showcase the difference between us and them. We'll spend a lot of time on that because there's a major difference. There's also a major difference in terms of our moral code and our principles, which is probably the most important thing. We're not here to lie, cheat, steal, pump, and dump on you. We're not part of the establishment. We don't go lick Goldman Sachs' earlobes in the morning before we get up. You know, it's just not. It's not what this is about. No. This is a fourth turning thing. You need a Gen X guy that people that are from the elites, baby boomers in particular, hate. You need somebody to hate me and therefore blackball my team, which CNBC's done, Bloomberg's done, New York Times has done, all these places have done, Fox Business has done. You don't get blackballed for free. You get blackballed because you're making a difference. Because you are the change, right? You are the change, as Gandhi would say, that you want to see in the world. And they can't afford seeing that. Their compensation structure depends on that not changing. But the world's changing, as it always does. And one of the great births that we've had, in addition to the political change that we've had, and I'm not making a political statement, and I don't even like Donald Trump, the great delivery to the people was the AI. Because it levels the playing field in terms of getting to the truth faster. Even when the elites have the inside information, we know that they know. We've been empowered. We've broadened the community to both old and young. We're together. It's awesome. And if you come back next week, we appreciate that. I can guarantee you one thing. One thing. I'm not going to guarantee you returns. I'm not going to guarantee Rooster a job in perpetuity. I'm going to guarantee you one thing. God willing, every fucking market day, I'm going to be up earlier than them and working harder than them alongside my teammates. Every fucking day. Compete with us. We enjoy that. That's what competitive people in America and free market capitalists should want. Game on.
And that's a great spot to wrap it up. Thank you, everybody, for joining us, and please continue to join us. We'll wrap it up there. Be back at Monday. Good luck out there.